state of the industrial and warehouse real estate market is the topic of my conversation today with Alex Cohen. He is CEO of Liberty SBF. Hello, Alex.
Hi, how you doing?
Good. Thank you very much for being with me. So what is current demand like as you see it in the industrial and warehouse real estate market?
Well, we continue to see robust demand, across the country, both on the institutional side as well as for end users of that product. There certainly have been industries or property types that have been affected by COVID in a negative way, whether that's hospitality or healthcare facilities or office in certain sectors. But we have seen continued rent growth and continued cap rate compression and increased price per square foot on transactions across the warehouse and industrial property sector, really in most major markets in the U.S.
Indeed, we're hearing that there's a severe shortage of warehousing and distribution space in a number of places around the country, in line with the overall supply chain congestion that starts at the ports and goes inland. I guess it's all part of one big package, isn't it?
Yeah, absolutely.
Yeah. And you say all over the country, are there any particular areas where it's most acute, where current demand is especially strong and where the situation is especially, whether this is the situation in certain parts of the country?
Yeah, absolutely. I mean, I think you nailed it on the head in terms of thinking about coastal markets that are in, proximate locations, infill, but proximate locations to the major port areas. I sit in Los Angeles. Obviously, there's been a lot of press about the Port of Los Angeles, but whether you're talking about, the Los Angeles, city of Los Angeles, industrial submarkets, the Inland Empire, really all of Southern California, there's been, shortages of stock. There have been increases in rents and values paid. And I think the story is very similar on the East Coast as well.
Especially
you have more ports, on the East Coast, both in the Northeast and Mid-Atlantic, but you also have the southern ports of Charleston and Savannah. And so we've seen lift in submarkets proximate to those locations. And that those are some of the areas where some of the shortages are most acute. Of course.
Yeah, in particular in the Inland Empire, which has served for so many years as supposedly the ideal space for warehousing in support of activities at the Port of Long Beach, LA. We were thinking for so many years that it just seemed like there was endless capacity out there, but not so much anymore at the moment, right?
No, absolutely not.
Yeah.
Even in the Empire, seeing shortages.
Now, not only we're talking
really
about
one of the things.
Go on, I'm sorry. No, please continue.
No, I was just going to say, we happen to finance a lot of end users, right? So we have a perspective of looking at that part of the market, end users in particular, operating businesses who are buying real estate for their operating business as the tenant. In years past, end users were the highest bid on some of these properties versus investment real estate participants. But some of the larger institutional buyers have really started to even assert what end users are paying on a per square foot basis. So, and you have end users who typically were not competing against landlords for space are even getting pushed down by institutional buyers who are chasing yield and chasing product.
Now, not only are we just talking about the demand for generic warehouse space, but are we not talking about differences in what characterizes a warehouse today at all? Of course, we have the million-plus square foot warehouses, the gigantic distribution centers, but we hear more and more about the location of smaller facilities closer to urban centers, the so-called micro-fulfillment warehouses, the distribution warehouses that are closer to customers of e-commerce. Is that indeed a trend? Are we seeing a change in the very nature of the warehouse itself?
Yeah, absolutely. We are, and a lot of the business plans that we're seeing today for flex space include, this idea of minimizing the amount of office space in a property, increasing the amount of warehouse space, or even warehouse and lab space for certain more scientific or medical or biotech type users. But certainly, given the lack of available warehouse space, pure warehouse space, or pure industrial space, we're seeing a lot more business plans being presented to us where you have an office heavy flex property where the sponsor is looking to execute a business plan to reduce the footprint of office within that property and increase the footprint of warehouse.
Another trend we've seen in certain places around the country are the conversion of existing retail space, in sometimes cases of malls or entire stores becoming warehouses themselves, versus the greenfield approach, the ground up demand. Do you see a trend in one of those over the other?
Yeah, I mean, and look, there are certainly opportunities to convert retail into warehouse or last mile delivery locations. There are some uphill battles against that type of adaptive reuse, whether that's zoning, parking, or generally the location of those properties being close to or proximate to residential neighborhoods. So, the ability to get those zoned into a warehouse or industrial property type, which would allow for the types of trucking and logistics coming in and out through the ingresses and egresses, and dealing with a lot of those types of issues, make some of those business, make the adaptive reuse of retail into warehouse and industrial properties challenging, particularly in certain markets. But given the lack of available warehouse space in major metro cores where you need that last mile delivery storage space, we're certainly seeing those types of business plans being executed as well, albeit certain challenges, depending on the zoning and the municipal approval process to change the zoning.
How are financing needs changing, especially in the current atmosphere of rising inflation and rising interest rates, obviously affecting the ability, the cost of money and the ability to finance facilities like that? What are you seeing in that area?
Yeah, I mean, obviously borrowers who are looking to acquire properties are competing against all cash buyers. So having a financing partner that can close quickly, or the ability to close with cash and then execute into your financing strategy, are things that borrowers should be thinking about. We've seen a shortening of due diligence periods on purchase and sale agreements. We've seen a shortening of total timelines as it relates to purchase and sale agreements. So having a lender that can close inside of 45 days, or certainly inside of 60 days, is very important. So picking the right lender, picking a lender that you've executed with in the past, or having the ability to execute, to close cash and then go and execute your financing strategy, are issues and trends that we've been seeing, over the last 18 to 24 months, irrespective of COVID. And there may have been a short period of time there when, demand slowed down, but, given the fact that e-commerce had such a lift during that same period, we saw a very short slowdown and then a huge uptick in demand for acquisitions of warehouse and industrial properties. In terms of inflation and rising rates, inflation's here. The Fed is certainly going to raise rates, short of some sort of big catastrophic economic external force. And there's certainly, risks on the horizon, whether that's, what's going on in Russia and the Ukraine today, or other sort of risk factors that are spooking the markets. We certainly expect inflation to continue through the end of this year. We expect the Fed to raise interest rates in March, at least 50 basis points, if not 75. And we expect the Fed to continue to raise interest rates throughout the rest of the year. So from our perspective as a lender, we're seeing a lot of borrowers who are refinancing into, new mortgages, trying to lock in a fixed rate financing today prior to what will certainly be continued rising of rates through the end of the year.
So you're expecting a hot market in this area for the rest of this year and beyond, not any quick change in the current situation?
I don't think so.
Yeah. Well, thanks so much, Alex, for talking to me a little bit about the picture of the state of the industrial warehouse real estate market. At this point, though, I'd like to ask you a little bit about Liberty SBF itself. Tell me about the company. What area of the marketplace do you occupy, and how are you helping your customers get through these difficult times right now?
Absolutely. So we are a specialty finance company lender. We are a direct lender, not a bank. So we are purely focused on providing financing to borrowers. We focus on businesses, owner-occupied commercial real estate, businesses that are looking to acquire or refinance real estate that they occupy. We co-lend with the Small Business Administration, as well as offer conventional loans for ground-up construction, repositioning of properties, or straight acquisitions and refis. Because we are able to co-lend with the Small Business Administration, we're able to offer borrowers high leverage, low cost financing up to 90% LTV or LTC. So really attractive, high leverage solutions, low cost solutions. And because we're a pure play specialist, we're able to move quickly and offer certainty of execution without sacrificing on the cost side and the leverage side. Given a lot of the issues that borrowers are facing today, we can offer very attractive refi solutions for these types of borrowers. We can offer very quick acquisition financing for these types of borrowers. And to a point you made earlier, given the lack of availability of existing and improved structures in the market for borrowers who have identified a piece of land or entitled a piece of land, we can also offer ground up construction for build to suit type property development deals.
Alex Cohen, I want to thank you once again for painting a picture for me of the industrial and warehouse real estate market right now, where it might be going, as well as telling me a little bit about Liberty SBF itself. Thanks very much for your time.
Thank you.